A pristine server room projects order and safety, but keeping those spaces clean introduces severe, hidden financial hazards. For commercial cleaning contractors, comprehensive insurance is never an administrative hurdle or a simple regulatory box to check. It is the core infrastructure keeping both the business and the facility manager out of ruinous liability. A single unmitigated hazard, whether it is a visitor slipping on a freshly mopped floor missing its safety signage, or a chemical overspray damaging a tenant's expensive furniture, will instantly wipe out a contractor's profit margins and drag the property owner into extensive litigation. Mapping exactly where these liabilities sit is the absolute first step for anyone looking to survive and scale operations in the commercial sector. To manage this, institutional clients demand a specific baseline of protection before they will even read a cleaning tender. We call this the defense stack, and it starts with public liability. Most major property groups in business districts require a minimum coverage of $20 million to protect against third-party property damage or personal injury. Next comes workers' compensation. In a highly physical industry, musculoskeletal injuries are frequent, making this coverage strictly mandatory. Smart operators offset the high premiums by investing heavily upfront in workplace health and safety training, which drastically lowers their incident rates. Then we add professional indemnity. This policy handles the financial fallout when a cleaning program fails its compliance requirements. If inadequate infection control in a medical facility leads to a healthcare-associated outbreak, professional indemnity covers the resulting financial loss. Finally, the stack is capped with product liability. Even when staff use highly regulated certified chemicals, misapplication happens. Using a chlorine-based sanitizer on incompatible stainless steel fixtures can cause tens of thousands of dollars in pitting and surface damage. Product liability acts as the safety net for those specific chemical hazards. By constructing this layered defense, contractors convert wildly unpredictable catastrophic risks into calculated, predictable operational costs. But standard liability policies leave major operational blind spots exposed. If a fleet vehicle is broken into, standard auto insurance won't replace stolen gear. Losing specialized machinery, like an $8,000 extraction unit, means eating the replacement cost out of pocket immediately. That expense easily cripples a mid-sized operation overnight. And physical assets are only half the equation. The Fair Work Act creates a massive legal exposure known as accessorial liability. Insurance policies offer zero protection against wage theft. If a cleaning contractor underpays their staff, the building owners and facility managers who hired them can be directly prosecuted and financially penalized for a non-compliant supply chain. While the insurance stack protects against physical accidents, rigorous internal compliance audits are the only shield against the systemic legal risks that destroy companies from within. This places the facility manager squarely at the gate of all this liability. They must actively verify these exact protections during the procurement phase. The tool for this is the Certificate of Currency, the document that legally proves active coverage. It must clearly display 4 critical details: the insurer's name, the policy number, the specific coverage amount, and the exact expiry date. Building owners have faced massive shared liability because a contractor submitted a fabricated document during a tender process, and a workers' compensation policy quietly lapsed months before a serious accident occurred. The rule for commercial facilities is strict: never trust the paper alone. Maintain your liability firewall by calling the insurer directly to verify the certificate. This chart shows the stark reality of the financial math. On the left is the predictable cost of an annual premium. On the right is the immediate, volatile impact of a single major property damage claim. For a mid-sized cleaning operation turning over up to $2 million, public liability premiums typically range from $3,000 to $8,000 a year. Compare that to immediately paying $150,000 in legal defense and asset replacement directly out of your cash reserves. When weighed against the absolute certainty of bankruptcy from a major claim, a robust insurance program is mathematically the cheapest asset protection a commercial cleaning business can buy. Top-tier firms understand this math completely, and they treat their compliance profiles as an aggressive competitive advantage. By maintaining low incident rates and carrying fully transparent, comprehensive coverage, they broadcast a powerful signal of trust. This allows them to consistently win lucrative tenders against cheaper competitors who cut corners on their policies. This verified risk management aligns perfectly with the strict requirements of modern corporate, environmental, social, and governance reporting, and hits the labor standards set by the Cleaning Accountability Framework. Ultimately, professional cleaning contractors deliver a specialized product, institutional-grade risk mitigation for building owners who cannot afford a single unmanaged liability.